In this video, I just want to follow up with some thoughts to look at the market from a technical perspective, especially at the 200-day moving average, which is a signal and a moving average that a lot of people are watching for a sign of bull or bear market. So we're going to dive into that and just look at some different perspectives to try and figure out, are we still in a bull market or in a bear market? What's up guys, Dirk here from intelligentcryptocurrency.com. If you are new to the channel, click the subscribe button. Click that notification bell so you do get future updates. If you want to get an email every time I do upload a new video, sign up for my email list. It is the first link in the description below. Click on that, sign up, and then I can send you an email every time I upload a new video so you don't miss any future content. Alright, so diving straight into it, this is the Bitcoin US dollar chart. It is a daily chart, and all that we have in terms of indicators on this chart is the 200-day moving average, and this is widely regarded in pretty much any type of market as kind of a line in the sand between bear and bull market. But having said that, no single indicator is reliable as a 100% confirmation. As with everything, you will only always know in hindsight, and sometimes with indicators, especially looking at just single indicators, because a lot of people do it and a lot of people have a similar expectation, sometimes the opposite happens. So if everyone is looking at a specific indicator to mark whether we are in a bull or a bear market, or whether the trend is reversing, yes or no, sometimes if a lot of people believe in the same thing, the opposite actually happens. It's kind of funny. So you always got to be flexible for both options. So Bitcoin is currently at $36,500. Obviously, that is a long way down from the 65,000 that it was, but at the same time, it is also still a very long way up from the $3,000 bottom that we formed at the beginning of 2018. We are still more than 10x up from the lows of 2018. So keep everything in perspective. Now, simple observation, basically the entire bull run of 2017, we stayed above the 200-day moving average on the daily, right? So that is why a lot of people are thinking that this is basically the line in the sand for the bull market or the bear market. But it is not always as simple as that. So right now we are below the 200-day moving average, as you can see. So technically, purely based on the previous cycle over here, you would say that being below this 200-day moving average is not a good thing for the future of the bull run. At the same time, we also had a huge extension, and we didn't test the 200-day moving average as much as we did here. You can see in this previous bull run, if I zoom in, you can see there were almost 2 pullbacks on it, right? We stayed above it here, 1, 2, almost 3 pullbacks to this 200-day moving average, whereas this time we barely had that. Like even these two, they weren't even really on the 200-day moving average. Here, this was far away from it, this was far away from it. So you could almost say like this current bull run that we've had from September, October was actually much stronger and steeper and deviated further away from the 200. That is why we had a more violent pullback towards the 200. It's just like a pendulum, like a rubber band that can only extend so much away from the mean before it pulls back, and the faster and the further it pulls away from it, the faster it snaps back to it and goes through to the other side when it does come back. Now, does this necessarily mean we need to get a continuation down? And the answer is a no. That is not always the case. So like I said, it's going to be hard to figure this out, and right now all we can do is just basically just guess. We have to see how the market develops, how the trend develops. But you can see at times where we have pulled back and snapped back, you can see this was pretty much the bear market of 2018, and you can see how that was a much slower bleeding grind towards the 200-day moving average, and then finally it poked below it. And at this point, let's just zoom in over here. At this point, you can see we had a snapback from when we went under it of almost 100%. So it almost doubled. It went from 5,800 to 11,600 over there after it broke through that. And you can see this was a much slower grind in terms of time also. We can see over here. So if we take this top over here and we see how long it took to get there, it took a total period of 52 days from the high. If you look over here and we count this, you can see this only took 10 days. Even if you count it from the 65K high, you can see for it to happen only took 36 days. So the pullback was much more violent too. So that means that what we could be seeing here is again a more rubber band type effect, where if we do pull back below this and maybe this bottom is already in, that because of the violent nature of the pullback, because we had such a steep rally, and this is basically just the correction, the rubber band effect pulling it down, that we did shoot through under the 200 moving average, and that we might actually end up extending back up. And if we do 100% extension like we did the last time, we're looking at going back, you know, up to 60k, maybe around over here, just as a rebound rally sometime in the near future. That's a possibility. You can see also over here, right, what happened here the last time we pulled back below the 200. This was basically the March 2020 crash, which shares a lot of similarities to the crash that we had just now. It was also very violent. It was a large drop. People were thinking, hey, crypto is dead, etc., etc. And you can see over here, when we pulled back down from the lows over here at the bottom of March, you can see that we did a 235% rally within 156 days. Within 6 months, we were back at 2x. So basically a 2x from here, 235%. You can see that would take us to about 100k in 6 months, which is the time frame that we're looking at. We've looked at this other stuff. So in yesterday's video, I went through a bunch of different charts and time cycles. I'm not going to do that again to repeat myself in this video. So go and watch that if you haven't done it already. I'll link to it up here and in the description below. But basically, we are only 12 months past the halving, which, if you look at the 2017 cycle, that was 18 months. So that would give us another 6 months to go if that cycle repeats, if we get an 18-month bull cycle this time. And in 6 months, if you even just look at what happened there after the March 2020 crash, even just a 230% from here would still put us at 100k by the end of the year. And it is still possible that we actually exceed that, because there's a lot of people, like I said in the previous video too, that are still giving price predictions for Bitcoin anywhere between 100k and 300k this year, this cycle. So combine that with a few other factors. The fact that this does not look like an actual blow off top like we had here with a very steep run, huge. This looks more like a distribution, right? And a distribution ends up just being a consolidation before a further run up and a blow off. Okay, so that's one thing I'm looking at here too. Second thing, like I just said, is the timing. Okay, we're only 12 months in. 2017 cycle was 18 months. Then if you look at the third thing, also following up on the cycles, there has not been a cycle, even though we don't have a lot of data to work with. Okay, crypto is pretty young. There's only a few years, so I know statistically it's not super significant. But the 2013 blow-off peak was in November, end of November 2013. The 2017 blow-off peak for Bitcoin was in December 2017. So it would be an anomaly for the crypto market to peak in the middle of the year as a bull run cycle. If we have that blow off top, it is more likely, if it follows the 4-year cycle, to be somewhere in November, December, or maybe even January 2022. So that is the third point already. The fourth point that I'm seeing is that the sentiment is incredibly, incredibly negative. I'm getting a lot of messages, comments, DMs, where people are saying, okay, this is done. We're in a bear market. We're going down for 3 years. Bitcoin is toast. It's going down to 20K, 12K, 8K. It's going to zero, right? And I'm seeing a huge amount of negativity. And these are kind of always the haters and the trolls that tend to come out when Bitcoin has a dip. And then for the whole bull run, they're quiet and they're eating their words. And as soon as Bitcoin has a crash, they're like, yeah, look, I see, I told you so. Bitcoin is a scam, right? Like the people who've been calling it a scam since like $1,000 or $3,000. And then it was at $20,000 and then it crashes and they're like, oh, it's a scam. And then it's back up at $65,000 and it drops and they're like, oh, it's a scam. You know, you always get these kind of people. So I'm personally seeing a lot of that sentiment-wise, which makes me think we are nowhere near this actually being the end of the bull run. So one thing I'm also seeing is there's a lot of these Wall Street cheat sheets coming out on social media, especially on Twitter, where people are basically saying, hey, you know, we've had the euphoria, we're complacency, that was the lower high, and now we're somewhere at denial already. My investments are with great companies, they will come back. Now, the thing with this is that most people are not complacent from what I'm seeing. A lot of people are incredibly fearful. I don't see a lot of denial going on. I don't see complacency where like, hey, this is just a rally, we're going to new highs and stuff like that. That's basically what I'm saying, right? We're looking at the data and I'm saying, hey, you know, so some people are saying, oh, you're just a complacency, we need a cool off for the next rally. But most people are not. Most people are basically saying, hey, this is done. We are dead. We are back at 2018 bear market. We're going down. this is going to 10K or below, and that kind of stuff that just doesn't match with any sort of complacency or denial at this part of the cycle. So honestly, in my opinion, I'm thinking this is not anywhere near complacency. I don't think we've had the euphoria or the thrill just yet. And even though we are now under the 200 moving average, I suspect there could actually be, besides a few months or a few weeks of sideways trading at this point, there could actually just be a snapback correction where we basically now underextended below too much. We shot through it. I think we could have a nice recovery to above the 200-day moving average, create that consolidation, and I still think there's a very good argument to be made that we are going to continue to new highs by the end of the year, that this cycle is not done yet, that we still have another 5, 6, 7 months left of this bull run cycle before the whole thing is over. Now, of course, only we will know in hindsight, so for sure by January 2022, we'll be able to look back and say, hey, that was indeed the case, and that was indeed where we are now. It was not the bottom, and we went a lot higher. Or we'll be able to look back and we'll say, well, hey, it actually was the top and we just ended up going a lot lower. So of course there is always the possibility. Nobody knows for sure. You can't assume with 100% certainty that we are going to continue the bull run and be at new highs at the end of the year. There is always a risk of downside. Who knows what's going to happen in the world? If there's going to be changes or more economic policies or disasters or events, or who knows what can happen, right? So that's why you always have to manage your risk, and that's why you can never go all in. And that's actually why with crypto the risk management is so important, and why I'm always stressing, experts are saying 10% or less of your net worth in crypto, so that even if it does go down, it's not the end of the world for you. And if you choose to do so, you can just continue to hold. As long as you're holding solid coins, Bitcoin, Ethereum, some other good coins, in the long run, it's likely that you are going to be able to get in profit. Remember what happened in 2017. Even if you bought the very top at 20K, if it didn't stress you out and you just held your Bitcoin, you could have still been up more than 3x just 3 years later. So that is how it goes. And I think there's a good argument to be made that in the next years from now, Bitcoin is going to go way, way higher than $65,000, because what isn't changing is all the innovation in the space. The adoption keeps increasing. The infrastructure, the awareness, none of that has changed. Banks are investing in it, funds, PayPal is offering crypto, right? More and more this infrastructure is being built out. This adoption is increasing. None of that stuff has changed. Also, the stimulus and the debt levels go out of control. Fiat currency is getting worth less and less and less every single day. The last year and a half, so much currency has been added to circulation. The purchasing power of currency has dropped. Where do you put your money? Bitcoin is still a possible solution to maintaining your purchasing power, at least for a percentage of your wealth. Okay, so none of that stuff has changed. Zoom out, keep the bigger picture in mind. Personally, I do not think this is the start of a new bear market just yet. I am still personally leaning towards a higher high at the end of the year. The bull run is not done, and we probably still have 5, 6, 7 months left. But of course, we will only know this in hindsight. I could be wrong here, okay? So I can't see the future. You have to manage your risk. I can't give you financial advice or tell you what to do. This is just my opinion. Looking at the charts, looking at the data, putting that together, and of course, we will know for sure in 6 months from now. So thanks for watching. Make sure you subscribe, hit that notification bell, sign up for my email list, first link in the description. Leave a comment. What do you think? Because I'm seeing some comments here like, oh, the bull run is over, the bear market has started, all this kind of stuff. Leave your thoughts. Let's look at it, look at it objectively. Let's see what's happening. Leave a comment down below. I'd be happy to see what you have to say. Thanks for watching, guys, and I will see you in the next video. Have an awesome weekend. Take a nice walk, spend some time outside. It's good. Get some fresh air, get some sunlight, and just have a really, really nice weekend. Don't stress out too much. In the long run, everything is going to be okay. Thanks for watching. See you next time.